Hello, Warriors. Here's my pre-ECB update. Tomorrow, ECB meets, and while that's happening, let's take a look at some of the markets, especially the euro. I do want to start off with the 10-year. 10-year looks to me like it bottomed. Um, Very interesting divergence down here. As you can see, I've been working off this blue speed line for about 2 months now, and we had one hit here, we had an overthrow here, but you notice the candle did not close outside of this return line and it's heading higher. So, it has impact on a lot of things, higher yields, especially the yen, right? I've taught about the correlation that higher yields mean higher US dollar yen, which is happening here. Never got towards my 107 70 target. Maybe we have to rally one more time back up into this level, but I don't see anything short term that makes me want to jump on a short in the end at this time. Had a little two driver that also diverged quite a bit, and the euro has been so quiet for so many days that it's developing into a falling wedge. So let me move myself around here and we'll draw a trend line here so you could kind of see what's happening visually is that we have this falling wedge and we are diverging, but you could throw all of that out until the presser with Lagarde tomorrow. So, one of the red events that I try and avoid trading is central banks. Uh, Non-farm payrolls are two that come to mind right away. And with the ECB meeting tomorrow, I'm looking to react to it with possibly buying it if we spike lower. There's going to be all kinds of divergences here. Maybe we get one more shot down under the recent low at 17 and a half. We start closing back over 1780 or so. Um, right here, we have a shot for 1800. And why not a pullback in the dollar and the euro having some relief and even rallying back up towards the 119 levels? So neutral going into the ECB. Bias is to potentially look for reversals to the upside after the ECB. And I could move this back over here now. So this is the wedge that we're talking about. Let's draw the wedge line in there. So here's let's anchor it right here, which would get it up to 1880. Could probably take it all the way back to this 1930 level. Let's do this. Okay, so here's your look of a falling wedge back over 1810 ought to trigger it. And I've anchored it a little bit above 1930. So if we start closing back over 1810, which was 61.8 back, good chance for another 120 pip advance on the euro. So that's kind of my plan for the ECB is to uh, look to sell strength, cable acting a little better, but than euro today, but I don't really see anything short term that I want to jump on as far as cable. Canada starting to correct from the 27.5 level, and that's happening because oil is bouncing. Now, one thing I want to stress is that I think this was a pretty important break. I know that bulls welcomed this break. When we were up here, I was talking about 69. So here we are back at 69. I think that there's a good chance that there's another shoe to drop, but even a 50% correction could bring us back to this prior low of 71. Okay, so at 71, another day like this, I'd be looking to short the crude. I'm not calling this a bottom, although we've had a nice pop in the last day and a half. Still think that we had a failing rally up here and that there are lower numbers to come in the oil. Moving over to the commodity currencies, they're still acting pretty heavy. Uh, there there is some divergence developing, but look at the weakness in the commodity currencies on this wave compared to the euro, where it's more of a grinding decline rather than more of a directional decline after it took out support. So um, also the EG, which is having a very good week, now in a pullback phase, I really think put in a bottom. Uh, we are pulling back here, and I want to see what happens. Maybe another 40, 50 pips lower. Still think we can make a move to 87 and a half, and here's your 88 confluence of moving averages, just a shade above it. So we'll see. We have to close above 85.40 by Friday, but to me, it's looking like we're going to get some type of ABC back to about 88. So again, if the euro is weaker than the pound tomorrow, I would use any news by the ECB to start nibbling at euro pound right around this 85.80 level. As I said, with the stronger yen and higher yields, it's not helping the gold at all. In fact, this is the first day in a while where silver is outperforming. As you can see, the gold silver ratio is starting to pull back. That could last a few days. Gold, I maintain my bearish stance here. You know, you look at the 1793 and 1833 is about a $40 decline. So if we start taking out, let's call it, let's just go with the horizontal line right here. We start taking out these levels. You're talking about 1760 and a test of these all old levels. I actually think we're headed more, we're going to take out these lows, but you could see that this formation right here, about 40 bucks, you take that out, that's 752, which is uh, right around the lows that we had back on the solstice. That was the low in the gold on the solstice. So, you know, it's interesting when I'm doing my analysis and sharing it with you guys that sometimes I come to these dates and they are the solstices and equinoxes, and it's amazing how the market can change with the season. So gold is having a decent summer, but this is going to be real critical for the gold. I'm still bearish. So even if we do get some type of dollar correction, which you can tell we're starting to grind out here. I remember I had a 92, 95 level. You know, it's possible it could be a pretty good correction, maybe even take us back down towards the 92 to 91.40 level. It's be interesting to see what happens on the ECB. Again, if there is strength in the dollar based on the ECB, I think there could be a fade for correction. Uh, you know, the sentiment indexes on the dollar are they were so one-sided coming into the beginning of the year. Everyone was bearish a dollar. There are a lot more bulls in the dollar now than there was. So we could get an interruption in this dollar trend. I just want to discuss something that's happening fundamentally from things I learned from my sources and people I interview. I was interviewing Harold Malgrim, and he told me that this was before Yellen's conversation or her interview that she did on CNN. That's very possible that Paul is not renominated by the Biden administration to be Fed chair. His term ends near year end, and that most likely would be replaced by Brainerd, who Yellen has um more in common with as far as policy and progressive policy. So Paul is faced with the choice of his legacy since his tenure may be limited to another 6 months or so. And there's a situation going on where there's been a lot of reverse repos occurring in the market. And with that happening, they're trying to drain reserves because the banks are so awash in cash, they can't keep it on the balance sheet. And that's why they're doing drains. Every day it shot up quite a bit, this reverse repo, um, which is, they're trying to drain the cash that the banks can't hold on their balance sheets. Lending has contracted, so that's a problem. And it's a problem for the banking system. They're trying to resolve by having bank balances go to money market funds so the banks could keep. You never thought it would be a problem for the banks to have too much liquidity, but that's what's going on. And another one of my sources said because of that, they believe MT Mellon then believes that we Powell will go ahead with the taper in August, which is a little different time frame than most people are prepared for because a lot of the Fed officials have been talking about that the market is set up for tapering to begin at the end of the year. So August is not the end of the year, so there could be a surprise by the Fed in August. And as we're talking, yields continue to go higher, and just want to hammer home this um, correlation. Look at the yen bottomed at the same time as yields, right? Maybe there was one more dip in yields, but um, having a pretty decent week. We're on the verge of a reversal week to the upside. Higher rates may be good for financial institutions, for banks, if they've been suffering with yields coming off. Not so good for growth stocks. Higher yields kind of take some of the steam out of it and create some competition on yield. And um, these are mainly your large cap growth stocks that we have here in NASDAQ. So NASDAQ and every market recovered quite dramatically yesterday, but just take a look at where NASDAQ stopped so far. Right at the 61.8% retrace and the 50-day moving average on the 4 hour. So NASDAQ not acting as good as S&Ps. S&Ps, NASDAQ's down 11 while the S&Ps are up 13. So S&Ps acting better. That they've surpassed the 61.8. A trader friend of mine said the S&P is like 78.6, so we'll see if we could get up to 43.58, which is an important number, not only because of that, but because of the off number that we have at 43.68. So to negate last week's 2-week reversal, S&Ps are going to need 43.68, which is another 27 handles from here. So the big question for everyone is, was this just another one of these sell-offs that we just bottom and then grind and blow off to new highs? Or is this going to be the first failing rally we've had in a long time? The jury's out. So we'll see what happens here. Right now, I'm viewing the NASDAQ as a failing rally. Look how much weaker it looks than the S&P. So it's becoming the preferred short. We could take a look at what's happening also in the Dow, which snapped back pretty dramatically yesterday, and the Russell did too. I mean, the market, everyone hated, including myself, thinking that we are going to have a breakdown. And so we've had false breakouts in Russell. We've had false breakdowns in Russell. And it reminds me of a saying that markets bottom in silence, where they're very dull, saucer bottoms, and they take a long time to develop, and they top with violence. So you're getting this kind of action in the Russell, where you're getting people saying it's breaking out. No, it's aborting. No, it's breaking out. It's a test of a breakout. No, it's aborting. Now it's breaking down. No, it's negated the breakdown, and here we are. I still think that's going to be some type of fib retrace, and there's some rotation going on into it. The high of the move is 234. So far we've bounced back almost 50%, not quite 50%. So still not making new highs. I don't think that we will make a new high in the Russell 2000. Let's take a look at what's happening here in the Dow. It's up 200. So we filled this gap. We had this finally took the Dow till last week to take out the March high. Oh, this was a May high in the Dow, and we took it out by about 20 points. Had the big gap down, and now we're right here back in this. If the Dow makes another new high, it's not going to confirm, as you can see looking at the 4 hour here. And we'll see how we finish over the next couple days. This still could be a failing rally. And something else that I want everyone to pay attention to, and that's a junk bond market that normally you get a signal from what's happening in junk and even corporates. And we had this big break on the daily. And as you can tell, even compared to the indexes, this is a pretty weak rally we have in HYG, which is high yield corporates, which are junk bonds. And in my view, this could also be a failing rally. If we start getting back over 87.80, that's a different story. But if we roll over and take out the low of this move from last week into Monday, then we have a problem here happening in the biggest bubble. The biggest bubble is not equities. The biggest bubble is taking place in the corporate bond market, high quality LQD and lower quality being HYG. And the spreads between treasuries had narrowed to historically low levels. Normally, you're going to have to pay a higher yield if you're rated in junk compared to being rated as investment grade. So something else for you to keep an eye on. I think this is a pretty good lead indicator for the markets, and also want to show that along with the 10-year bottoming, what happened in TLT yesterday was pretty important. In fact, we're following through again today. And to me, it looks like we had this reversal day, and now we're pulling back here. I think there's more left to the downside, maybe 142, but pretty classic 1, 2, 3. The RSI pattern isn't classic, but um, I'd be careful with my long bond position as well, under pressure here. And that's a wrap up of the stock market. Uh, Big rally in Bitcoin. And also, here's the wedge. We're on the verge. So we pretty much held 29. We're in this falling wedge, and looks to me like we're on the verge of breaking out in crypto. Right here above 32,000 would be a pretty good signal. If we abort, I was thinking that we could trade down to 26. I mainly chart this for my followers that trade crypto. It's a little bit too reflexive for me. So that's the way that looks. We're getting an alert on the Dixie. So what's a Dixie doing? Is it selling off? Yeah, we're starting to get this pop in the euro and the pound. Let's see what happens. Maybe we're going to break out before the ECB. And I did want to show look at the euro, and I showed this before. So look at the euro, say 2 hour, okay? So it's made consistent lower lows, right? But look at the Swiss. It's made consistent. It made a lower high here. Look at the 4 hour. Never made a new high when the euro made a new low. here, and Euro's making a new low, and Swiss is putting in another higher low, lower low. So here's the first one, here's the second one. And if we're going to get a correction in the dollar, I was talking about this yesterday, selling the Swiss in this range up here, thinking that we could have another one of these take us down to about 90.30, 90.50 in the coming days. This was my preferred short for trading a dollar correction here. And I want to invite everyone to come and join us here on tradegatehub.com if you're watching us on YouTube, to come here and go ahead and share your work. You could post your charts here. You could come here and ask me questions about what my views are in the market and become part of our community. So, Swiss heading down, potential dollar correction, flat into the ECB tomorrow, rising wedge back over 1810. I think we have a shot for 1930. And gold, I still think is going to have some problems. It's trying to rally with the dollar, but here's your bull bear line in the sand around today's lows, 1794. And under that, I think you're looking at a retest of the lows. So as I end every broadcast, remember, don't just count your pips, count your blessings. Very important action happening here in yield. So we'll see if we continue to get follow through. It's going to take quite a lot to have a breakout in yields. We still need closes back over 148, but Rome wasn't built in a day, and the markets start with one candle at a time, one step at a time, and very possible this was a pullback in yields after the huge move that we had, and that there could be another rally back to the upside to take out 78 and head towards 230, 240 on the 10-year. So that's my call and the way I see things, and want to I hope that I'm adding value to what you're trying to accomplish as a trader. That's our mission statement, to build up and edify traders every day. Good hunting the rest of the day, and don't just count your pips, count your blessings. Adios. I'll see you for an interview tomorrow with the Pivot King. Those of you that know Steve, I've seen him at times hit trades on the button to the pip. So that's what we have planned for you tomorrow. So see everyone tomorrow for the interview with Steve at thebesttraders.com. The Pivot King will be with us on TradeGate Hub tomorrow. Adios.